What's up, ladies and gentlemen? Welcome back to the channel. I appreciate all of you guys who are supporting my channel by viewing and leaving likes. You guys are great. Today in this video, we're going to be talking about new week opening gaps and how you can potentially use these strategies to pass your prop firm challenges or to make live profits in your real account, you guys. But before we get into this video, we have to do a quick government risk disclaimer. The information that you're going to receive in this video is not financial advice. I am not a financial advisor. This video is intended for educational purposes to inform you guys on how to use new week opening gaps to better your trading strategy. So let's get straight into this video. All right, you guys. So we are looking at the NASDAQ, right? We are looking at my NASDAQ chart, and I know what you guys are thinking, right? It looks crazy, right? And it does, right? Because I use a lot of strategies to trade. Those of you who have been following my channel for some time now, you guys hear me talk about the gaps that I like to use in the market, right? I don't typically use just regular gaps like on a 4-hour, just your regular fair value gap. I use it to read price, but I don't really use it the way that most ICT students are probably using it, right? The gaps that I like to use are the new week opening gap, the new day opening gap, and the opening range gap, right? Those are the top 3 gaps that I like to use. And then I also use the first presented fair value gap as well. You guys hear me talk a lot about that, right? But in this video, we're talking about the new week opening gap, right? So the new week opening gap forms every Sunday. Well, not every Sunday, because sometimes it do not form, right? But it forms Sunday at 6 p.m. Eastern Standard Time when the market opens back up on Sundays, right? And you can find them on your chart. I'm not going to go try to find one right now, but as you guys can see, I have many of them marked out, right? I'm going to delete this, and I normally make them purple boxes. So, and then I label them as right here. You guys can see I label them new week opening gap, and then I typically put the date. And the reason why I put the date in there is because I like to see, it's just a way for me to backtest to see how effective a new week opening gap really is. As you guys can see, this one is from September the 21st, right? And obviously, you guys, one of the things I want to talk about as well in this video, right? The bigger the gap, the more magnetic it's going to be towards price, right? So I'm going to give you guys an example, right? This little thin new week opening gap is not going to pull a price as much as this bigger new week opening gap, right? However, I'm going to show you guys why even the small new week opening gaps are still important, you guys. And we're going to do that by breaking down last Friday's price action. Okay, so I'm going to go into the 1-minute chart. All right, I'm going to go into the 1-minute chart, and we're going to look at last Friday's price action. Okay, so I'm going to put a vertical line at, just so I can always remember where I'm at, I'm going to put it at the 925 candle, right? So as you guys can see right here, this is last Friday's price action. We had an opening range gap, right? You guys see I marked it right here. Well, actually, I didn't update this. This date is not correct, right? Because I had just slid my old opening range down. But this should say, like, I think last Friday was the 6th or the 7th, right? So this is from November the 6th, right? So as you guys can see, I had already formed a bearish bias, right? Because if you look on a daily time frame, you guys, right, we have been coming down tremendously, right? We've been, we made a high. At first we was moving up, then we swept liquidity. We had a big candle close below, right? This became a bearish engulfing candle on a daily, right? Let me zoom in for you guys. This candle right here became a bearish engulfing on the daily time frame. Price bumps into this wick right here, and then we begins to sell off, right? So I was already anticipating a sell-off, and what am I targeting, right? I'm targeting on the weekly time frame, because at this point, if we go back to the daily time frame, right? If we go back to the daily time frame, what you guys have noticed, by Friday, we had already swept all of these daily lows, right? We swept this daily low. We swept this daily low, right? We swept all of these daily lows. So what I did was, to find a target, I went to the weekly time frame to see, okay, what could this market possibly want to target? We had this weekly low right here you guys can see I had it marked out on my chart right here, right? It says weekly low. And then this is literally where the market wigged down, right? If I delete this vertical line, you guys can see that the market wigged down and took this liquidity, right? So we knew our bias, and we knew our target, but how do we trade it, right? How do we trade this market? And that's what I'm going to show you guys today, all right? So just bear with me. So like I said, I'm going to put this vertical line. I had to take that off real fast so you guys can see what I was looking at. Put it back on the 925 candle, right? So look at how when we get our opening range gap, right, price touches the bottom of this gap, right? Now, ICT always talks about quadrants, and quadrants are very important because if the market is only touching the lower quadrant of this significant gap, right, if it can't even get up to the middle, that means it's a likelihood that price is going to really start to move down and really start to move down aggressively, right? So here, this is exactly how I have my chart, you guys. I don't even use fair value gaps. You know, some of you guys may still be at a level, right, in your ICT journey where you may do something like this, right? Swing low, swing high, and then you mark this, fair value gap up because it's in the premium zone. And as you guys can see, you could have sold from this level, right? It's not incorrect to sell from this level, but that is not how I trade, right? That is not how I trade using ICT concepts. I used to trade that way using ICT concepts, but as I told you guys in the last video, I was taking this trade with the ideal of we're not going back above this order block right here, right? So I set my stop loss in here, and I was taking my sells in here as the market came back up, right? Now, what I want you guys to notice, right? Right? So this right here, what I'm looking at right here, so this is 9:30, right? We get a drop as soon as the market open. Then we go into consolidation, right? So notice how this new week opening gap is holding price down for a little while. Now, why is it doing this, right? Well, it's building liquidity in here. And the reason why it's building liquidity is because it's going to fake people out because everybody knows that the market is going down, right? So what it's going to do is going to fake people out on this run back up, and then it's going to drop, right? Notice how we come up here, we touch the lower quadrant once again of this new week opening gap, right? So this could have been, a trade that you could have taken, right? Stop loss up here. And let's say, let's just see, right? Let's just say you get in right here. You don't have a perfect entry. Me, I have my stop loss all the way up there because I like to have a safe stop loss. And then for me, my next target would have been this new week opening gap down here, right? So right off the rip, that's almost a 3-to-1, 2.46 to 1 risk to reward ratio, right? But we're not talking about risk to reward ratios in this video. We're talking about price action, right? So notice how we touch the lower quadrant, and then we have a sell-off coming down here to sweep all of this liquidity. And then notice right away, what do? We stop right before this new week opening gap down here. Now, why did it stop before this new week opening gap? Well, you probably already guessed it. It's building liquidity, right? So what it's going to do is it's going to create some liquidity down here, and then it's going to go all the way back up again to fake traders out, you guys. Fake traders out, right? And this is a famous pattern that I mentioned in videos before. When you see a big red candle going down, just almost getting to your target, but it don't quite get there. And then you see a big green candle back up. If I'm in this trade, I'm already out, right? I'm already going to be getting out of that trade. But because of my experience, I know that the market likes to do this all the time anyway. So I was already expecting them to just stop the market right here and then pull it back up. Why was I expecting that, right? That's a great question. Why was I expecting that to happen? Well, it was Friday. We were supposed to have NFP news, but the NFP news didn't come out because of the government shutdown or whatever else, right? And then also notice how all of this consolidation. So even though we're moving down, we're not doing it super fast, right? So that lets me know that the market is going to continue to do all of this back and forth before it makes its real move, right? But notice up here once again, right? I'm forming this ideal based on the new week opening gaps, right? I also have to include that I'm forming this idea based on a new week opening gap. I know that my next level that I want to see touch, right? Obviously, we're targeting that weekly low, but I know that if I'm taking this trade, the next level that I want to see is this level, right? And the market makers know that. So that's why they're going to reverse it. But also, that's why, I'm going to take another sell when the market comes back up here, because I understand that they're just trying to fake me out, right? They're just trying to fake me out. Notice how we broke above this new week opening gap, and then we went all the way back into the lower quadrant again, you guys, right? We went back into that lower quadrant again. So the reason why I mentioned that is because you can also use these new week opening gaps to read price action, right? So instead of selling right here, you pretty much take the same ideals that ICT teaches with, once this candle right here breaks above this new week opening gap, you kind of know that it's going to treat this as support, at least for the short term. And that's exactly what it did. It treated it as support, right? We came up here, faked a bunch of people out. Maybe people started to think it was just the market was going to start going up, right? So now people are buying, right? They're trapping buyers all the way up here at these higher levels. And then eventually we break down below, break up top again, because the market is still choppy and it's still faking people out. You got to understand, that's what the market makers want. They want you to be confused, right? They want you to, even if you had a bias that the market is going to go down, they want you to doubt that bias when the price is moving in real time, right? So that's why you have to have a really good stop loss. Notice my stop loss was all the way up here. Never once did it even get close to get touched, right? So you have to have a really good stop loss, because some of you guys make the mistake of, jamming your stop loss up. And this is why I use that example right here, where if you're a beginner ICT student and you use this fair value gap right here, right? And let's say you put your stop loss right there, instantly you get stopped out. If you put your stop loss right there, you don't get stopped out. But as you see in the market come closer and closer, you may be a little bit worried about that. So, but for me, I'm going to put my stop loss up here. All right? I'm going to put my stop loss up there so that I know that my trade is safe. And then we get another breakdown, sweeping this liquidity right into this new week opening gap right here, right? Now, these are all trades that I took, you guys. Once we break down below this new week opening gap, all right, I'm going to also be selling right here, because I'm not going to lie, I took profits in here. When it went down to here, I took profits because, like I said, it was a bit choppy. It wasn't moving the way that I wanted it to move. So I took profits. I waited for more information. And then as I seen that we broke down and then we had a retest, right? We had a retest. Notice how none of these bodies, after we broke down, none of these bodies are closing within this new week opening gap, right? So when I'm looking at live price, these are all of the things that I'm taking note of. So I did take another sell from here. It wasn't really moving as fast as I want. So I covered somewhere. I can't really remember my exact entries, but I covered somewhere again, and then it popped back up right here. Act like it wanted to go up there and maybe sweep liquidity, but it didn't. And then from here, I was just watching, and I took another sell right off this weekly low. And that's just simply off of, experience and back testing, you guys. I was able to, once I see that, hey, we made this high right here, it's not even trying to sweep liquidity, I'm going to use this high as my stop loss. And that's exactly what I did. All right, so I did take another trade. It was small, but, it gave me what I needed, right? And the reason why I was able to do that is because I was honestly looking for a bigger target. I wanted to see this sell side liquidity on a 5-minute chart. I'm not going to go and show you guys this on a 5-minute, but we pretty much had a liquidity pool right down here. So I was selling up here with the hopes that we can get down there. But just like I told you guys, with the new week opening gap, the market likes to stop right before a key level, right? This blue line is the wick, I believe, on the weekly time frame. So we hit a key level right here. Then bam, the market started to reverse. We pulled up, touched this new week opening gap again, came down a little bit, and then eventually broke above it and used it as support. Now, notice how when the market breaks above it and use it as support, right? I mean, just look at it. It's clean. Look at how when it comes back down here, it hits the midpoint of this new week opening gap and just keeps bouncing, right? So this is why, you have to use the bigger gaps, right? The new day opening gap, new week opening gap, right? Opening range gap. You have to be able to use these things. I'm not saying never use these fair value. I'm not saying don't use them. What I'm saying is don't just use them purely to find an entry. What I'm saying is use these type of gaps to read price. So when price came down here, the same pattern I just showed you guys up here when it made this big wick, right? Because when the price is moving in real time, this is like a really fast candle, so it drops. It drops really fast. The same thing it did right here. Right here, right? Drops really fast, came back up. Same thing it did right here again. Dropped fast, came back up. Once I see that, now I know price is really starting to reverse. So at the time, I wanted to take a buy. Even when I seen this happen right here, I wanted to take a buy, but I didn't because I was thinking sales. And when I'm thinking sales, I just want to be selling, right? But after, you see all of this upwards momentum, and then you see all of these, you start to see things to the upside get broken, right? Like bearish order blocks, bearish fair value gaps. You start to see those get broken as the market is going back up. Now you have even more confirmation that this market is selling off, right? Then we have another breakaway gap in here, right? We have another breakaway gap in here that was never touched. So this is your breakaway gap. And as you guys can see, the market never touched it, and then it just kept going up, up, and up, and up, right? And here's one of the reasons why the market kept going up like this. I'm going to give you guys another gem before we close this video out, right? If you go to the weekly time frame, and this is really a gem. It's nothing too crazy. A lot of you probably already know this, but for the ones who don't know it, this is for you, right? We had a weekly order block right here, weekly order block. Whenever price touch these bigger time frames for the first time, they're going to have a reaction, right? So the first time we touch in this new week order, the first time we touch this weekly order block, we're bouncing, right? Now the second time when it come down, it's likely to just keep coming down and sweep this liquidity, sweep all of this liquidity in here, right? Even these equal lows down here is likely to just go ahead and sweep all of that. But you have to understand the first touches are going to be a bounce. Like right here, we have a 2-week order block. The first time it touched into here is going to likely have some type of reaction, right? And that's just a gem for you guys. So that is how I use new week opening gaps, you guys. They're so important because when price is actually moving, like when you're waiting on the bigger days, because that's what I'm working on right now. I do like to scout, but I'm mostly trying to wait for days where I can go for 300 or 400 points. So when you're waiting on these bigger days, this is how, you can really capitalize on these days, because the market is going to likely respect these bigger gaps versus like those little 1 hour fair value gaps or 1 hour order blocks. The market is going to just crash right through those every time. But it's going to have reactions at these new week opening gaps. It's going to have reactions at the new day opening gaps, the opening range gaps, right? It's going to have reactions at these levels, you guys. So that is why I use these levels, and that is why I try to teach my subscribers that, hey, you guys should use these levels as well. So if you guys enjoyed this video, make sure to drop a like. I would greatly appreciate that. Subscribe to the channel if you haven't already. And also, if you guys are going to go purchase a prop firm account, you guys already know the top 4 companies that I like: FTMO, Funder Pro, E8 Markets, and Alpha Capital. You guys know that I prefer forex prop firms over futures prop firms. However, I'm still affiliated with Trade Day and Apex as well. So if you guys do go purchase any of those accounts, make sure to use code KRACKEN, and that will be the best way to support this channel. I appreciate you guys for watching. I will see y'all in the next one. Peace out.